Welcome to the VSA Capital Tech and Transitional Energy podcast. It's Thursday, the 16th of June, and I, David Scriven, am with Phil Smith. How are you, Phil? How are you, Phil?
Thank you very much, David. And good. Yeah.
Good to hear that. You slightly broke up on me there, so hopefully we don't have any technical details, but any technical problems. But anyways, I'll start the podcast and say that those hopes for a follow through of green from last night evaporated today with, of course, negative futures. Now, Powell's insistence that 75 beeps is not new normal increment is being questioned by the market, especially when you consider it wasn't long ago that he dismissed 75 bips as not being on the table. Stocks have tended to rise in Fed raise cycles, 12 of those since the 50s, the only exception being in 1974. The key point here is that, bar that exception, the economy was expanding. So people are conscious of whether we will be able to sustain economic momentum or whether we're headed for recession. So I think these are things that are sort of gripping the sentiment of the market at the moment. Anyways, looking at Bloomberg, I wanted to revisit a theme that we had when I was last on the podcast concerning cybersecurity. And Morningstar have written about cybersecurity and highlighting that the industry growth rate, in their estimation, is 12% compound for the next 5 years. And they highlight that companies enjoy high margins, that we're consistently getting an increase in ransomware attacks, and there's interesting M&A in the industry at the current moment. So as valuations come off, there could be a catalyst of more M&A to come. Now, the names they mention are in the US, and they can be found on Bloomberg. CrowdStrike, Fortinet, Okra, Palo Alto are a few of those names. But I also wanted to mention that, of course, we've talked about and highlighted Carrero in previous podcasts. And before I bring Phil into the podcast, I just wanted to mention that I've taken a quick look at Informa, and the results are very encouraging for them in the context of saying that they're reconfirming their guidance. Academic markets were up 3.5%. Live and online demand events were up 100%. B2B digital services up 10%, and they completed that pharma intelligence agreement for 1.9 billion, basically making them debt free. And of course, they've got very strong cash generation. They've got a share buyback whose average was 5.75 so far, and they're going to reinstate dividends. So very good news for Informa. And now for more detail on from my colleague Phil, and he will start off in the renewable space.
I certainly will, David. I hope you can hear me. There's a gentleman with a very big strimmer outside. not in my house, I hasten to add. I always stop now, so hopefully he'll stay away. Right, okay, so this is Tech and Transitional Energy, and just talking about renewable energy and some positive news, which is what we need this week, David, I feel. And that was seen that BP has announced that it's going to make a very large investment into a green hydrogen project in Western Australia. Total project's going to cost 30 billion to develop, and they're going to buy a 40% stake in it. This is the Asian Renewable Energy Hub, and this particular project is 6,500.
Phil, are you there?
Is to 26 gigawatts of solar and wind power. So very big investment there from BP. Staying on the theme of energy is that Total Energy have announced that they have agreed to buy a 25% stake in Adani New Industries project in, I think this is in India, which is going to spend more than $50 billion over 10 years to build capacity to produce 1 million tons of green hydrogen by 2030. So some some big investment in renewable projects there. And staying on the theme, I don't know if you've come across this company before, but John Laing Environmental. The ticker is JLEN, Jlen. Market cap's just under 750 million. This company had its results today for the year ending March, and they have a portfolio of renewable generation assets. And there are 37 assets, and these include wind and PV and solar and wastewater. And they had said in their results that during the year, the net asset value had increased by 25%. So a very strong increase in the value of those assets. They'd raised £118 million. And if you note, David, on screen, you'll see that the shares generally have been a very good performer. So in these markets, given a nice spread of assets in renewable space, this one I think is well worth taking a look at. That's John Laing Environmental.
Indeed, and a nice dividend as well.
Yeah, indeed. I think the divvy's about just over 5%. So a good play. And then staying on environmental, a company I'd not come across before is Aqua. That's spelt ENERAQUA. Aqua Technologies. The ticker's ETP. Market cap is 94 million. This is a company that had an IPO in November last year, and has made a couple of strategic acquisitions totaling 5.1 million. And one of those was in a water control system technology, and they call it control flow. And this reduces water wastage and improves the performance of heating hot water systems. And I think the others are related into they're looking at heat pump solutions. So they provide turnkey retrofit into district communal heating systems using high efficiency gas or heat pumps. So two sort of strands to this business. And they had reported results which were showing revenues up from 14.6 million to 36.2 million. That would be, the acquisitions in there, but nonetheless, this is good progress as company. And EBITDA going from 1.3 million to 5.6 million. Good balance sheet, report a strong order book. So that's a new company, not one I'd come across before, but an interesting set of results.
That does sound very interesting. Is that exclusively for Indian markets, or I know we're new to this name, but is it a broader market that they're looking at in terms of geographies?
I think this is a broader market. I mean, they said that post the period end that their irrigation solution had been selected by the Department of Horticulture in India, and it was a 0.9 million contract. But I want to take a closer look at this one, but it's probably a broader portfolio. But water conservation, is an area of global interest and potentially a structural growth area for them. So very interesting.
Yeah, definitely. And their EBIT margins moving up quite nicely as well.
Yeah, absolutely. Something we like to see. And as cash increasingly becomes king, seeing margins rise is all important. Now that's sort of renewables, but getting on to more pure tech. And this company that's been listed for a good long while, called Netcall. Don't know if you've come across Netcall before, David?
No, I haven't.
Right, okay. Ticker is NET. Market cap's 127 million. And this company provides technology for, it says, intelligent automation customer engagement software is what it does. And I think remember this originally doing like call queuing software at call centers, but it's far more advanced than that now. And their platform is working with S&P 500 financial services firms. So they've got operation. They've just announced. Yeah, I was going to say they've announced. What they've done is Netcall's announced a significant contract. It's with an S&P 500 financial services firm. And they said the revenue for that is 3-year cloud subscription contract is up to $19 million. So quite a significant contract for them. And as a result of that contract, the board now expects adjusted EBITDA for full year 2020 to be significantly ahead of previous expectations. Now, the shares on this company, they've spiked up on this. But what's of note, I was just looking at the financial ratios, David. It's on the EV net revenue multiple. This is from Icon of 4 times falling to 3.3 times, and a forecast EPS growth from 1.7p to 2.7p. So that's good, strong underlying growth is expected for the company going forward. So nice to see some good positive results and a good net call.
Yeah, no, definitely should be on people's radar, I think, to have a further look.
Yeah. Okay. Now, getting on to companies that during a downturn and coming out of a downturn are always, are potentially going to benefit. Now, one of those is, we'll look at Halma. The ticker is HLMA. The market cap is 7.4 billion. It's a 0.9% dividend. The shares are down 40% year to date. Now, let's look at what it does. The company, Halma, provide technologies, it's electronics and instrumentation that saves, as they say, saves lives, protects infrastructure, enables safe movement, protects assets in critical industries and logistics. And examples they give are like elevator safety, fire suppression, fire detection, pressure management, safe storage, etc. So lots of applications across lots and lots of industries. And it involves obviously capital spend. And if there are fears about capital spend weakening because of slowing economic growth, then unfortunately companies like this are going to be impacted. But nonetheless, these are very high quality. This is a high quality global company now. And I don't know if you had a look at the results today, David, but they were showing that their statutory profit before tax was up by 20% to 304 million. From 253 million, but that actually included a gain of 34 million on the disposal. So, that's the underlying tax. It looks like the underlying pre-tax profit is up actually 6% on sales, up by 16%. So, nonetheless, it was supposedly ahead of expectations from analysts, and they pointed out they've got strong order books and expect good returns in the coming year. However, the company has grown significantly since 2005, when their chief executive, who's announced today he's finally retiring, was originally appointed, and their revenues have grown from 300 million to 1.5 billion today. So maybe the market's a bit disappointed that he is moving on, but people have to retire at some stage. But also, I suspect there's an element of caution over the outlook for the economy there. But companies like this, and the one I'm going to talk about next, Oxford Instruments, are ones to keep your eye on when the shares start to really come off, because of the threat of an economic downturn, because these are global operators with good global brands.
Yeah, no, definitely. I've been a big fan of Halma. I've sort of kept an eye on them for many, many years. I haven't actually bought any stock simply because they're within investment trusts that I hold, which is a subject we talked about on a previous podcast. But yeah, I've got a huge amount of positive thoughts on Halma there. So definitely, I would have that one on your radar and want to be a long-term holder.
Yeah, right. There's a second one. And you look at the share price on this since 2019, it's more than doubled, even with the recent. It's off 24% year to date. So good reason to be looking at these things when they're coming off and with a view. This is Oxford Instruments, OXIG. It's 1.2 billion market cap. They've announced their full-year results, and I previously used to cover this as an analyst. Now, Oxford Instruments is a terrific brand. It's known in laboratories all around the world, and they provide instrumentation that is within things like electron microscopes, deposition and etch tools, which are used in semiconductor manufacture. They do X-ray instrumentation, they do nuclear magnetic resonance for measurement. So anything, they produce the instruments that are used to develop highly advanced materials and products, and they work at like the nano scale. So this is really advanced science stuff, and they're using end industries like agriculture, food, automotive, aerospace, bioimaging, life sciences, chemicals. So lots of end industries use them, and this is a global brand. Now I remember this one post the Lehman crash absolutely came off, but my word did it recover as the economy recovered and companies started to spend even more on equipment. Anyway, quickly, their annual revenue increased by they reported 15% to 367 million. So that was very good, and they saw a lot of growth in Asia. Asian growth was up by 26%. It's half their revenue, so you can tell it's Asian economies and academic institutions investing in tech. So that was good. Their operating margin fell slightly by the looks of it. And I think they said they'd seen some supply chain disruption and cost inflation that impacted margins a bit. So, again, probably the market has reacted a bit on Oxford Instruments, but this is one way you take quite a longer view, as we go through this cycle, because this is fundamentally a very, very good company.
Sounds good. And it makes me sort of think, as you've highlighted a number of names here, diversification, exposure to a number of industries, global exposure, are all positive characteristics, I think, at this point in time, not least for the fact that you've got to put into the perspective that the pound is weak, so that's where some of these companies are going to benefit if they're in getting a decent translation. But unless there's anything else you would like to add, I think we could perhaps draw the meeting to a close. Anything else you want to pop in here, or should we call it a day? And thank you for your very kind thoughts, sir.
Well, I'm absolutely delighted. We've been a little bit thin on specific company news this week, but results will be coming through. We're also heading into, as we go into July, we'll have the US reporting period as well to get through, but lots happening. Some of it is not great, obviously, for shareholders at the moment, but some of it is very good. So we'll try and highlight good things to look at.
Yeah, we'll find oases of interest for people in a tough time.
Absolutely. Well, look forward to chatting next week, David.
Many thanks.
Bye-bye.